focus on the cement space and the big deal that has taken place in UltraTech Cements. We have two gentlemen joining in. Remember, UltraTech will acquire 23% stake in India Cements, and there's huge consolidation happening in the cement sector. What does this mean for the ecosystem, for the dynamics of the cement sector? Gurmeet, Chadha, Managing Partner and CIO, Complete Circle Consultants, and Rohit Srivastava, Founder and Strategist at IndiaCharts.com, join in. Gentlemen, morning to both of you. Gurmeet, I want to understand how to approach the sector from here on, because large players are coming in, not just UltraTech, not just the Birla Group, but also, Adani Group, etc., coming in, consolidating, getting a larger chunk of the assets. What does this mean for the dynamics of the sector, and how does a retail investor approach it now?
Thanks for having me, Sonia. And having started my career as a cement guy, it's heartening to see some consolidation now. Finally, it was a very scattered industry. And I think that's where it's headed now. They acquired their Parli unit, if you remember, in April for 300 odd crores of India Cement. UltraTech has massive plans. They've actually announced 200 MTPA, in one of their annual meetings. They're already at about 147, and the capex they have announced will take it up to 160. And they have been acquiring companies in the past. In fact, post Adani taking over Ambuja ACC, they have acquired a couple of names, including Sanghi, including Penna. Penna, they actually paid almost $80 a ton. Sanghi was also at around $95. This particular stake also is not very inexpensive. So what this could do now is there could be other smaller players which could gain focus. And, without taking names, I've been speaking to some of them. There's a lot of due diligence happening, both by UltraTech and, the Adani Group, on a lot of smaller names also. So there are a couple of names where probably the valuations are still cheap, like $50, $60 a ton, which is below the replacement cost. So few names like, for example, Sagar Cement, the valuations are like $55, $60 a ton. Today, if you want to set up a new greenfield plant, it's between $90 to $100. So I think a lot of smaller players will gain in focus, and this will continue, in my view, for next couple of years, where these two large blocks will emerge. And mind you, UltraTech is already about the third largest cement player in terms of grey cement capacity in the world. So I see consolidation. And with consolidation, I think at some point of time, some pricing power will come. But for now, in larger names, there may not be much juice left as far as the current valuations are concerned.
No, got that. Gurmeet, good to speak with you. Thanks. Thanks for your time. Now, if you look at it, in the south, from what we understand, the numbers, so there is Kesoram as well. But even without Kesoram, UltraTech has a capacity in the south of about 20.5 million tons per annum.
Yeah.
With India Cements and Kesoram, capacity goes up to some 45 million tons. That's about 22% regional share. From the current 10%. This is only the southern markets, right? And cement largely is, you don't move cement from south to north. The freight, etc., is very high, so it's largely regional, looked at regionally. But are there any issues from a competition angle, sort of a CCI perspective as well, etc., or you think it's okay? Or you think that will be something to watch out for if they try to go all in India Cements beyond this current 23% which they've picked up?
Prashant, I don't think so. They've currently picked up, as you rightly said, 23%. It will go up, and once you cross, I think 27 probably needs a CCI approval. And there are more players in South. And if you see, for example, in India level, India's capacity is 600 million tons. We are producing about 390, 400. So we are moving inching towards better capacity utilization. But in South, if you see, it's more at about 50% by 60%. And that's where the price hikes have been a bit of a challenge. We were speaking to the Sagar Cements guys post, this new government coming in Telangana. And there's a lot of buzz around, infra and capex picking up in South with, new governments in place, especially in Telangana and, even Tamil Nadu trying to do that. And cement is, as you rightly said, is on an FOR basis. Logistics is a very important cost, and your proximity to the geographies you share is very important. Second is your power efficiency, right? So a lot of acquisition will happen where, you have a captive power, because that's another important cost. So my sense is you will see probably more names coming in. Already Sagar is up today 4% as your screen flashes. And there are some marquee investors who have entered in some of these smaller names in anticipation that there'll be consolidation. So I think the juice lies in picking up good smaller names and see where you're getting it below replacement cost or much below replacement cost with power efficiency, with proximity to the market, and more sale of non-trade sales. You have a trade sale where you supply to infra projects where the pricing is always an issue. And then you have the trade and channel sales. So I think the names which are now coming like India Cements and Sagar, etc., they are now having more channel sales. And that's where I think the larger players will focus upon getting more reach and penetration.
Okay. Rohit is also with us. Rohit, weigh in on how the cement stocks look, and in the entire pack, which one is looking the best, the chart?
No, I think you're seeing some interesting breakouts. Specifically, as you all were talking, I was opening up India Cements itself because that's in the news. And it had been consolidating out of its first breakout for, I think, several months now. And what today's action does, it sets the stage for probably the next move higher. Now, I don't want to really put out targets. We can't do that because we are not an advisory. But what I would say is this is a good trigger given that you have infrastructure already in focus, you have real estate already in focus, and the immediate rub-off is cement, so because there is going to be demand if you're going to really be building up on that. And an event like this has sort of set the momentum in favor of that, in favor of those stocks. So that much is clear. I mean, even if I just draw, like what we draw is a simple parallel channel around India Cements, the upper end of the channel will be, well above 400. So we then start thinking, okay, that's the next major resistance that we'll be watching over a period of time. None of this will happen, fast, but I think right now the momentum is there. It may not be over. So it's not like, okay, the news came in and, the party ends tomorrow. It's something that would probably last for a while.
In a name like UltraTech Cement, for example, it's been a big wealth creator, right, in the past. I mean, if you look at a 5-year chart of UltraTech Cement, it's only given great returns to shareholders. 5 years ago, the stock was, I think, at 4,000. Today, almost 12,000. So, Rohit, in the medium to longer term, is there still a lot more upside in a name like UltraTech Cement on the charts?
So I would think so. Like I said, this is a sector that indirectly, benefits from whatever is happening in infrastructure, real estate, the capex cycle and so on. So it's an indirect beneficiary of any, boom bust cycle. But cement, over time, what it used to be, say, if you go all the way back to the 1990s, it used to be one of the hottest sectors. But that was more because of the controlled environment, licensing, Raj, etc., which we were coming out of. After that, subsequently, while cement stocks have done well, they've really not been the top performing sector. Unfortunately, we don't have a sector index to make a direct comparison, but they've really not been in the top end in terms of relative performance. So which is probably why we don't talk so much about it. But it will tend to move in that direction overall because of what is happening in the economy.
Gurmeet, you said not much juice is left in the large cap space, and you would focus on some of the smaller ones where the valuations are attractive, trading at lower than the replacement cost. Particularly talk about UltraTech Cement and this acquisition, because while it does boost their presence in South India, it's not done at cheap valuations. I think it's done at $90 EV to ton. So a 5% up move on UltraTech on this acquisition? Or not acquisition, but at least it's 23% stake. What is the street building in?
Reema, we are in a bull market. So any good news gets magnified. So does, so I'm not saying there's no juice left in UltraTech. What I meant was in terms of near term. Because I think near term, the focus will shift on smaller players. Because see, if the top 5 players now have a market share of more than 55%. This was 35%, in 2018 or something. So the top players are expanding market share. It's still a little scattered. So as the top 3 guys start commanding about 60-70% market share, that's when the pricing power comes in. It's not a fair comparison, but look at telecom now. You don't have the tariff wars which we have seen. And once you are doing aggressive capex and acquiring, the return ratios can be a little bit in the place. So I meant near term, I would probably focus on the smaller names, more power efficient names. And if you see out of, let's say, 300 odd plants in India, 78 are in 3 states. So it's very concentrated, right? In terms of it's AP, it is, a bit of it in MP. And so I think South has been one area where capacity utilization has struggled to cross 55-60%. And any acquisition there may not yield immediate benefits, Once the overall capacity utilization picks up, more consolidation happens, I think the pricing power will come in. So long term, obviously, I think I'm all in for UltraTech and Ambuja. Near term, probably more focus on some value plays in smaller names.
No, absolutely. Stay with us, gentlemen. We continue to sort of, talk about this deal as when we come back. Have to take a quick commercial break here. The markets now, look at the index, 80 points higher. If I got that right, 23,948, 23,950 plus. So we started 50 points down and is now 80 points higher. So that's the kind of market we're in. I was saying, well, there is enough happening with single stocks, so index can do what, but the index is not being left behind at all. So more on markets as well. We are back with both Rohit and Gurmeet on the other side. Stay with us. So yeah, it's a good-looking screen, good-looking market. Gurmeet and Rohit are with us. Gurmeet, I'm going to come to you in just a bit, but Rohit, I wanted to your thoughts on the index itself, the market, which is zooming and how. It's been a terrific week. Last week, it was looking like last week was turning into a bit of a consolidation. We were entering a consolidation zone, but nothing doing. We're up there. So just your brief view near term, because there is an important budget event as well, right? Because for the first time, we will hear about what the government really wants to lay out in terms of a vision for the next 5 years under the changed circumstances, changed political equation in that sense, whatever it may be. So just your thoughts, Rohit.
Yeah, so see, what you saw last week is typically what we see in the week prior to expiry, because a lot of these stock options start hitting margins Friday, Monday, Tuesday, and then you get some selling rollover and all. And I think that sort of got over on Monday. So after that, what we are really seeing is the start of the next leg higher. And this next leg higher, then it's likely to continue, maybe not just into the budget, but beyond the budget. Because the market is really front-running more of a macro theme, which is that the investment cycle essentially is going to continue. And on the other hand, with a lot of things coming in place, I think we are slowly setting the stage for a period where interest rates will significantly go lower, which sort of then further adds as a trigger to all the existing themes, whether it's infrastructure, real estate, autos, consumption, and banking, which is the new kid on the block, because banking was underperforming most of 23. And now I think post this election result, you're actually seeing serious outperformance by the banking sector, especially in the private sector, NBFCs and so on. So I think that part is the new trend, which is likely to continue. Banks, leading from the front. So a lot of the interest rate sensitives, I think, are something to really focus on.
Okay. I just had one last question for Gurmeet before we let you go on this entire cement space, right? Now that this deal has happened, or rather the 23% stake has been bought, Gurmeet, what happens to the other smaller South-based cement players? If you do own, shares in some of these companies, what do you do?
So, Sonia, we picked up some exposure in Sagar Cement, close to at around 200 odd levels, again as a special situation, because at that point of time it was available at $40 a ton. And if you take these recent acquisitions, they have been done at between $80 to $100 a ton. So there is a case there. Then they acquired Andhra Cement, and they were so they were building more capacity there. Then they are also amongst one of the lowest cost producers. They're extremely power efficient. Very good OPC and PPC mix. OPC is basically ordinary Portland cement, and PPC is where you mix fly ash, which is so the right mix. They're just the right mix, like 50-50. Doing well, turning it around. It was loss making. Now they've broken even, reducing debt a little bit. So that's something we bought as a special situation, and so far it's up. The screen shows you what it is up. It's still at about $55-60. So we are looking at that, and we will look at now more names. May not be just focused on South, as I said, because this will happen across. And I think eventually you will see probably the two blocks, which is UltraTech and Adani ACC Ambuja, owning almost 60-70%. This will happen over the next couple of years. So we'll try and focus on few more names, especially in North and East also, ones which have dominance in Central, North and East. So that is where the capacity utilization has been a little better. a shade over 75%. And there has been moderate price hikes of 2 to 3 rupees bag frequently.
Okay, all right. We'll leave it there. Good perspectives, Gurmeet, as always. Great chat, Rohit. Thank you very much for joining us. Both of you, appreciate it as always here on CNBC TV18. Well, so that's the big story for this Thursday morning. UltraTech buying into India Cements, and perhaps there is more coming there. Stocks are flying. Cement space is doing well. Markets, of course, on a very steady footing after an initial lower opening. I think we're going to take a quick commercial break here. On the other side, our special segment, Indianomics. My colleague Lata will get chatting with a host of experts to discuss the implications of India government bonds entering the JP Morgan Global Emerging Market Index. Stay tuned. That's coming up.